Are you ready to dive into this week's market activity and macroeconomic outlook? Let's break it down. Last week, from June 30 to July 4, 2025, the U.S. stock markets showed solid gains. The S&P 500 rose by 2.09%. The Nasdaq 100 increased by 1.70%. The Dow Jones led the way with a 3.04% gain. The Russell 2000 was up by 3.25%. Investor confidence remained high. Internationally, Canada repealed its digital services tax, easing trade tensions. In the U.S., the Senate voted on President Trump's economic package, which promotes tax reform and infrastructure investments. This was good news for market growth. Geopolitical stability improved with a ceasefire between Israel and Iran. This led to a more favorable global outlook, boosting risk appetite in equity markets. The quarter ended strong with double-digit gains, especially for the Nasdaq. Despite positive trends, the trading volume was below average due to the July 4th holiday. On July 3rd, market sentiment was cautiously optimistic, with major indices at record highs. However, investors remained vigilant due to elevated valuations and signs of slowing consumer spending. As we move into July 7-11, key data releases are limited. The focus shifts to tariff negotiations and geopolitical developments. Important data includes Germany's industrial production and U.S. consumer expectations. Germany's lower industrial output may impact the DAX and industrial sectors. Conversely, better Eurozone retail sales could benefit consumer discretionary stocks. The U.S. consumer expectations and inflation sentiment will influence the Federal Reserve's outlook. Expect market volatility as the July 9 tariff expiration approaches. This affects the industrial, automotive, technology, and consumer goods sectors significantly. Current tariff negotiations are under scrutiny, and the outcomes will shape investment strategies. If tariffs are resolved positively, focus on large-cap tech and AI sectors, mitigating risks through volatility hedges. Opt for short-term government debt to protect against slowdowns. If a stalemate occurs, investors should move toward defensive sectors such as utilities and healthcare. Bank on long-duration U.S. Treasuries to capture safe haven demand. This scenario may call for gold as an effective hedge against geopolitical tensions. Keep an eye on companies reporting earnings this week, like GL, LU, Coty, and Dal, among others. To stay updated with timely analyses and top investment ideas, subscribe to Kai Wealth's upcoming services. Stay informed, stay invested, and adapt your trading plan as needed. For more insights, check out our ongoing analysis on our YouTube channel and check our website at www.kiwealth.com. Don't miss out on staying ahead of market shifts.